All right, guys, welcome back for another video. In today's video, I want to talk about the equity markets and also follow up on some Bitcoin on-chain analysis, kind of following up on the previous video I did tracking the largest Bitcoin whale. I thought that was pretty interesting, and there's some other on-chain metrics that are, I just want to talk about a little bit. But first, I'll start with the U.S. equities market. So, basically price is kind of sold off into basically this level right here. You can mark this consolidation off as, a consolidation base roughly right here, the top of that base coming in right there. You see tested up, found support roughly at this level right here. You can mark that off. And price ran up back there, tested back down here, broke above. So, one concept about consolidation that I believe is important is, the longer price spends in a consolidation, the more the more that area offers, right? So, if price had broken through here and not come down and spent more time in this range, this area probably wouldn't offer the same degree of certainty on the retest. But ultimately, long way of saying that time spent within a consolidation makes that area more significant. Anyway, so you come down to this area. This was before the actually Joe Biden was elected, and I guess the markets hate uncertainty, so the markets were probably consolidating, waiting for certainty, and ultimately rallied after they received that certainty. And now we fully retrace back into the November presidential election in America right here. And as we trace right down, we get, we're getting divergence on the RSI. So you got one drive, two drive, three drive coming in at support. It's hard to get extremely bearish under those conditions. Now, what makes me even more bullish is this. You see these retail trader premiums spent on put buying to open call buying. It's just like it's going parabolic, which is telling you that people are retail traders, even hedge funds, fund managers. They're buying so many puts that the premium is going astronomical. It's going totally astronomical. And, I would venture to bet that most of these puts bought in premium will expire worthless, probably. I mean, it's just the way the market works, right? And, if people are willing to buy a record amount of puts that are, selling at a crazy premium and will probably expire worthless, market makers and other brokers are more than willing to sell them those overpriced puts. But this is just something that tells me it's like, okay, well, the market is clearly offsides right now. Again, there's no guarantee in life, but it's the closest you get to a guarantee. So let's shift gears over to Bitcoin for a little bit. I had previously talked about I had tracked Bitcoin whale and documented the way that certain areas in the market where the whale was distributing. Let's go to the daily, and actually, I can probably pull it up really quick. Maybe not, but ultimately, you've got this level here. Take this off the chart. We'll just pull everything off the chart. You had the largest Bitcoin whale dump 1,000 BTC here, 1,000 BTC here, and 1,000 BTC here. So, if you want more evidence for how that happened, go look at the video I posted titled Market Manipulation, Tracking Bitcoin's Largest Whale. You'll see that. But, you don't have to track the largest whale exclusively. Like, while that may have been the largest Bitcoin whale in existence that we were focusing on in that video, there's still a lot of other wallets that are very large too, and in aggregate, are obviously bigger than the largest whale. and you can track that data too, right? So one thing that I often pay attention to, and there's a lot of on-chain data that really is kind of irrelevant and really doesn't matter all that much. Um, what is the most important piece of on-chain data is the Bitcoin exchange Netflow. So, anytime you see exchanges, uh, coins flowing into exchanges, we'll go. Um, Again, I don't have the historical data, but we'll pull up the Bitcoin price chart. Um, Following the Chinese miner ban, right in this level here, where this government of China banned Bitcoin mining, that led to this crash. Right before the crash, you saw coins flowing into exchanges, Bitcoin flowing into exchanges, hitting historical peaks. It went absolutely parabolic and went crazy high. And it's one of those things where it does have a significant degree of relevance. Now, of course, this chart here that I'm looking at doesn't show that, but if you were to go back, say, go to Glassnode data and look at that spring 2021 timeframe, you would see what I'm talking about. The coins flowing into exchanges spiked. And whenever you see that, you know that sell pressure is coming soon. And it's a great leading indicator, right? Because most indicators are lagging, and they tell you what's already happened. And this is one of the very, very few indicators that is leading, which makes it extremely unique, because it shows you that sell pressure is coming before the orders have hit the market. And conversely, if you see exchanges leaving, if you see coins leaving the exchange, it tells you the opposite, right? It tells you that, you know, um, generally, you know, these major players have finished their distribution and are now withdrawing their coins and holding them in cold storage. And what that tells you is that, that they would only do that to withdraw their coins to cold storage with the intent to hold for like a significant period of time. Now who knows what that period of time is, but you can say with certainty that if they're withdrawing a significant amount of coins from exchanges, that they're planning to hold for a period of time that is greater than a short period of time, right? They have a long position at that point that they're holding in cold storage, and you can see that coins leaving exchanges peaked during the June 2022 capitulation. So in June 2022, you had the highest realized losses ever taken in Bitcoin's history within a 14-day period. You had people capitulating there, and ironically, people who capitulated at that level are the same people who claim that we haven't capitulated yet, right? Even though we've seen record capitulation. Um, so anyway, you see record capitulation at that level, and somebody, if you have a record amount of sell orders hitting the market, um, you also have a record amount of buy orders hitting the market, right? Because somebody has to take the other side of that trade, right? So you have all these retail investors capitulating, and other not just retail, a lot of people capitulating. Somebody's taking that order, the other side of that order. Now, BlackRock announced that they got into the market uh, just a little bit after that capitulation. They're probably in the market for far longer than that. Actually, I know for a fact they're in the market for far longer than that. But they announced their spot client exposure after the capitulation. So I'm, you know, people like that are, entities like that, like BlackRock, right? They're going to take advantage of that capitulation because an entity like BlackRock, their book is too big to enter Bitcoin under normal conditions. So when you have a capitulation where price retraces dramatically and just pukes all these coins, right? That's a unique opportunity for somebody with a book that big to fill their book, right? Because if you just look at the supply dynamics of Bitcoin, it's very difficult for players that big to get in the market, right? It takes a very small amount of money to buy up all the circulating supply. So these massive capitulations are, um, you know, appear to be chaotic to like a retail trader, but for somebody like BlackRock, it's a major opportunity. So it's just a different perspective. But anyway, you see that capitulation, and you see coins leaving the exchanges, right? Which is kind of a bottom signal, right? It doesn't tell you that price is going to lift up naturally, but it is what you typically see at bottoms, even if it's not the ultimate bottom. Like right here, you had this area right here. We could probably go back on the price chart. Um, that'd be, I think, roughly this level here, or maybe this level here, but peak and then get a little bit of a rally. So again, it's not the perfect, and nothing ever is perfect, but you can tell that these things generally peak when price bottoms, right? Um, if only for a little bit. And you see the same peak coming down here. Um, just recently, a lot of coins left the exchange. So, it's actually probably more effective. This signal is probably more effective when it's coins flowing into exchanges than coins flowing out of exchanges, just to be totally transparent. But it is, I still believe it is extremely valuable both ways, right? Whether you're using it for a bullish bias or bearish bias, still relevant. Probably more relevant so when you see all those coins flowing into the exchange, because generally sell pressure hits with much more urgency than buy pressure. For whatever reason, you know, another way to express it is you generally take the stairway up and the elevator down, right? For whatever reason, these sell orders just hit the market with more urgency. So yeah, so you see this capitulation, you see coins being taken off the exchanges, and then that kind of leads to this next slide here, which is the liquid supply of BTC. This is the Bitcoin held by wallets that have held for a long period of time, haven't demonstrated a willingness to distribute or to sell, and instead can be characterized as wallets that are accumulating Bitcoin in usually cold storage, holding for long periods of time, and those are peaked with capitulation. So you see what you're seeing the coins right here. You get your capitulation, your exchange Netflow, and then you see the liquid supply pick up right there, right? So what you're seeing these you know whoever's taking the other side of that capitulation is you know buying up you know buying up those coins, generally taking them off the exchange, and you know these type of people have a longer time horizon than most people, and they're the type of entities that ultimately set in the floor. Um, see, and then you just see that continues to increase, and we see a recent spike up here, kind of you know flowing with this recent spike in exchanges being withdrawn from, or coins being withdrawn from the exchange. So this is further contributing to the supply tightening dynamics in Bitcoin. Now, of course, demand has dropped precipitously, with the what's been going on in the credit markets with the Federal Reserve, tightening of interest, tightening of financial policy and raising interest rates. A lot of these people who have Bitcoin as part of a portfolio, they sold that liquid part of their portfolio to backstop the other part of their portfolio. But when the credit markets turn around, and when uh, things, you get a new credit cycle, so to speak, Bitcoin will probably lead, just the same way that Bitcoin led to the downside, right? Bitcoin topped out um, in November 2021. It took the stock market 2 months longer to top out than Bitcoin, because Bitcoin's a leading indicator, right? It has less noise in its price signal than other markets, because the other markets are more manipulated than the Bitcoin market, right? They have intervention with central banks, governments. Um, Bitcoin just doesn't have that currently, right? There's no government or central bank intervening in the market, so it has more signal, and it leads, right? So I think that's also a point of confusion for a lot of people, is that they notice that Bitcoin is correlated to the equity market and the debt markets, Um, but they don't realize that it leads, right? They think it's a lagging. They think that the equity markets, um, lead the Bitcoin market. It's just not true. Um, you know, Bitcoin leads. If you go back test that, you can see that pretty clearly. I think it's just one of those things that people repeat over and over and over, and everybody says it, and there is a correlation there. So there is a grain of truth, but it's like putting the cart before the horse, right? So they are correlated, right? Bitcoin is correlated to equities. Equities are correlated to the debt market, just because everything is correlated to the debt market. So if the debt market tanks, everything's going to tank. But Bitcoin's going to tank first because it has less noise in the price signal, and the more manipulated assets are going to tank later in that correlation, right? And also to the upside as well. Um, and when the credit cycle does change around, then now you have this tightening of the supply dynamic in Bitcoin that will contribute to a parabolic rise. Now, obviously, that's not happening right now because demand is still, insufficient. But supply is tightening underneath that decrease in demand. So when demand is inherently unpredictable because it's governed by human emotion, when that demand flips around, it'll flip around and increase into a tightening supply. And if that happens on the back of maybe a pivot in the credit markets, a resupply of liquidity in the credit markets, um, you know, Bitcoin can resume the type of rallies that we all love Bitcoin for, right? The face ripping, face melting rallies. And who knows how far away that is. With the Bank of England pivoting recently, we saw that how quickly that can happen. They had a press conference that day, scheduled to talk about their tightening program, and the same day they canceled that conference and printed hundreds of billions of pounds. So these type of things can happen very quickly. It's important to keep, in my opinion, it's important to keep an eye on the fundamentals in the market because people tend to discount them, especially the more price trades contrary to them. They'll tend to say, well, that was wrong or it's irrelevant. Where really what the way I interpret it is it's like a rubber band, right? If price is moving contrary to some fundamental underlying market dynamics, it's like a rubber band. It's coiling up kinetic energy. And when it does revert to the mean, it'll probably over revert to the mean because, it was moving so far contrary to the underlying fundamentals. So anyway, I'll just leave it at that. But if you guys like this type of content, please make sure to leave a like on the video, subscribe to the channel, and I'll catch you guys in the next